of October. Hope you're having a good one and the week has started well for you, even if we haven't got any trading going underway yet. But maybe you have. Maybe you've got gold reversing. Let's see. I'm going to go straight to that chart, the gold chart, and see what we can see. First up, of course, we're trying to isolate the range of the day, or the range of Asia session, which of course begins on the second bar of the day, which is there. So the high of that range thus far today is there. The low of that range has been tested as we speak, and it's quite an important level as well, one would suggest, for gold. Do we want to trade this today? Well, I guess if you consider that our risk to go short would be $13 and our reward would be about $4, I'm going to say no to that. But if we happen to shoot down here and take that out, then it might be a different story. But no, I don't want to trade short into that. Do I want to trade long into the highs? Momentum would suggest that that would be the case. Market sentiment would suggest that that would be the case. I would suggest that I have no idea yet. Well, that's not quite true. I do have an idea, and my idea has not changed, and I'm wrong, or thus far being wrong, I've got to say, with gold, because my opinion of gold and the war scenario is that it's an overreaction. And that's really difficult to say when such atrocities are going on in the Middle East. And I really feel that. It's difficult to say. But the reality to me is this thing's been going on forever, the Middle East conflict, that is. Yes, it's escalated. And yes, we have massive reaction, as you might expect, around the world, with people's just screaming for stop, for peace, and some revenge, it's a terrible situation without question. Yet, and I continue to say, until the world gets involved, then really what's changed? Is the world involved? Well, the market would certainly tell you that that's the case, because it is 100% risk off at the moment. And that, of course, is giving gold a massive boost. If we look at the weekly chart, for instance, you can see the last 3 weeks have been absolutely on fire. It's just a skyrocket straight up in the air. And of course, there'll be a lot of people taking advantage of that, and good on them. Yet it still confounds me somewhat. So what do I do with gold? Well, I can do one of two things. I can say, don't want to know about it, or I can back myself and look for trades against the trend, the massive momentum, and of course market sentiment. Which one's the safer? Do nothing, right? So that's probably what I will do, unless I see something that's absolutely compelling. What would that be? Well, it would have to be a massive reversal signal on a reasonable time frame, I would have thought, to take a position, that's for sure. But to trade it just on an intraday basis, I don't think it's probably that difficult. Certainly that channel's looking very, very distinct to me. And if I were to see a reversal situation here, like a lower high, maybe we've already got that there. But if I was to see a rally and a lower high underneath here somewhere, I'd be most definitely willing to trade it down to here, taking profit at the bottom of the range. And that'll do. And I think that's probably where I'm at with gold. So I'm not going to trade it today because of our proximity to the weekly pivot. Yes, it's Monday, I know that. The weekly pivot may not mean too much, but you can see that gold has been reacting off the weekly pivot quite well. So it's a no from me trading the breakout today. just to backtrack and have a look at those previous days last week, or those days last week where you may have traded gold as a breakout. Monday, Tuesday, Wednesday, Thursday, Friday. It looks a little bit dicey, doesn't it, to be fair? But let's see what the results would have been. So the range on Monday, did we trade on Monday? I don't think we did, because of the same reason, proximity to the pivots. So the low of the range would have been here. The high of the range, 9 o'clock bar, would have been, that's the 10 o'clock bar, that's the 9 o'clock bar. So the high of the range would have been right there. So you would have been taken into the long, and you would have had your target at the daily pivot, right? Well, you would have been out of luck, because that turned out to be a loser. The Tuesday low of the range would have been, where's the 9 o'clock bar? Low of the range would have been, there's 11 o'clock, so there's 9. Low of the range would have been the first bar, right there. High of the range would have been right there. You would have been taken into the short and got your money. No problem at all. Wednesday, low of the range, where's the 9 o'clock bar? Right there. So the low of the range would have been there. High of the range would have been there. You wouldn't have been taken into the long. Would you have traded that into the daily pivot? I wouldn't have, but it would have been a winner, but a very small one had you taken it before the volatility kicked in. On Thursday, the low of the range would have been there. The high of the range would have been there. So you would have been taken into the long, and unless there was a DR1 up there and a terrible reward to risk to take that, it wouldn't have been a trade for me. Low of the range on Friday was there. High of the range on Friday was 7 there. You would have been taken into the short, and you would have got the money before the action resumed. So you should have done okay if you followed the rules on gold breakouts last week. Righto, what am I thinking this week? Well, I've got absolutely nothing in the market, zero in the market at all. But I'll go through what is on my watch list, and then maybe have a quick look at the game changer bars for the week. Euro pound continues to be on my watch list. We've been watching and being very patient with this one, looking for price to come back inside that range. That's the daily chart you're looking at. And we have a significant resistance level. That price is finding very, very difficult to break for that reason, but not for that reason alone. I see this coming back inside this range, and if it does and gives me a lower high, just like it did there, then that becomes a tradable scenario. Don't want to see a low test followed by a high test, though. So repeat that scenario, but get rid of that low test bar. That would be good for a euro pound short. Next is euro yen. I'm quite keen on the yen pairs this week. We do have, of course, 3 central banks, 4 in fact, but 3 major central banks. We've got the Bank of Japan, we've got the Bank of England, and we've got the Fed this week. So we're likely to see some volatility in the market, I'd put it that way. And it is quite a big week for news. The yen is probably going to be reliant, sadly, but yet again, on what the Bank of Japan has to say for themselves. I'm very keen on the yen pairs this week, but it may well come to nothing if the Bank of Japan doesn't play ball. I see euro yen as one of my favorite pairs for the week, and not just because of the potential, and I'll put it that way, it's only potential, and it's pure speculation, to be fair, that the Bank of Japan will adopt a little more hawkish stance than has been the case for the longest time. But because technically we've come back inside this range as well on euro versus the yen, I'd love to see today close below the monthly pivot, and tomorrow come back and challenge the highs, but not take out those highs. that would signal to me that we are destined to go back to the bottom of this range and potentially beyond. So I'd be keen to get into Euro Yen shorts, one of my favorite pairs for the week. But my favorite pair for the week in terms of yen pairs is still Kiwi versus the yen that we got into last week. And I'm kicking myself, absolutely kicking myself, that I tightened my stops up too early and got taken out at entry with this bar here. I would love to be still in this free trading because I think it's an excellent opportunity to make a truckload of cash, given that I see Kiwi yen down around this 82 mark, and we're currently at 87. So that looks like still one that I'm going to follow, and I'm very, very keen on that one. And I think it's the best of the yen pairs. Not so much the Aussie yen, and we had a look at the Aussie yen last week. The reason I don't like Aussie yen short is because of what's going on in Australia at the moment. And you're probably not aware of it. So I'll just give you a little bit of a heads up. You would have seen the inflation figures last week, which of course were not good in terms of they went up, which means, of course, that the central bank is now under pressure. The Reserve Bank of Australia is now under pressure. And just about every economist in Australia is tipping that there will be an interest rate increase from the RBA next Tuesday. That would be a bold move, I think, but that's what's being widely tipped around the traps here in Australia at the moment. There's also talk about more inflation being piled upon us, if you like. It's a bad choice of words, but there is a strong commentary around Australia at the moment that our migration policy is causing a lot of issues around inflation, being that we're allowing, I suppose, our migration levels are way, way above where they have been previously. And this is caused by a very, very tight labour market, of course. Not caused, but exacerbated by a very, very tight labour market. The downside of all that is that we've got a housing crisis in Australia. And the more people that are looking for houses, the more that's going to put pressure on house prices. The more that puts pressure on house prices, we're going to see inflation not come under control as quickly as the RBA would like, I believe. And that is the commentary around why I'm dubious about it, but and I know economists, but the economists and the banking people around Australia are talking interest rate increase next Tuesday. So I'll leave that one with you. That's why I don't really want to trade Aussie yen short at the moment. You can see the market's in a state of flux and it's got no idea where to go with Aussie yen anyway. Happy Monday to you too, Paul P. And Harry, yes, of course, next Tuesday is the most famous day in Australian racing, certainly, where the Melbourne Cup will be run. And I did a little exercise on this, actually, because I've got a mate with whom I invest in stocks. And we were talking about one of Australia's major retailers with Christmas coming up and the seasonal bias, of course, for retail in Australia for that particular company is extremely bullish. Yet I went back and had a look at every time the RBA had met on Melbourne Cup Day for the past 15 years. And every time they did, I don't know if I've got a copy of that somewhere. I might bring it up a bit later if I have. Oh, no, there you go. There you go. There was the exercise that I did. Every time that the RBA cut interest rates in November, that's actually October, November, December. So they cut interest rates. And of course, the market took off. I know we're in 2008 there. So it might be a little bit skewed. But they raised interest rates the very next year on October, November, and December. This is, don't forget, a seasonal bias bullish for this company. And look what happened, crashed. The very next year, they raised interest rates in November, market crashed. They cut interest rates in November the next year, in November 11, and in December, market went sideways. Cut interest rates November and December, market rallied like hell. Cut interest rates here, market rallied into Christmas. Raised interest rates here 3 times, October, November, December, and the bullish outlook for this retailer actually went down instead of going up, which is a seasonal bias. Interesting. I might do that exercise a little bit more, because we're actually considering buying this company. I've already got some shares in it, but we're actually considering buying this. I think I'll put that on hold, frankly, because of that little investigation that I did. Catherine's with me on the yen. Exhaustion and high probability of Bank of Japan doing something finally. Yeah. The Aussie point is interesting, and it keeps me out of the market really with the Aussie, rather than puts me into the market, because I'm not sure they will do it, but who knows. Righto, that's pretty much where I'm at. I'm a little bit bullish the Aussie, but I'm very bearish anything against the yen except for the US dollar, which I haven't really mentioned, but if there's time a little bit later, I still see that going up to here to 108. Got a nice candle, I suppose, for me, a nice candle on last week, and I see no reason why that double pump off the monthly pivot and the top of that range shouldn't put this up to 108. I can't see anybody racing out to sell US dollars at the moment. G'day, buddy.
Hi, mate. Sounds like you're. I like all the research. It sounds like you've been very, very busy.
Yeah, this is what happens when you crook, mate. You've got a little bit of time up your sleeve. So
yeah,
I did a little bit of research.
I like it. I really like it. And I'm with you as well with the yen. I've actually just taken a trade on the Sing yen, which I'll quickly show you, and then we'll talk about all the other bits and pieces. But
Cool.
it looks. I mean, it's going to be a difficult one. The trade is a low probability in many respects, because really I'm kind of picking out this as the high. And even though I quite like the level when you kind of look along, I might need to change the color of this. Just change this. Hi, Paul P, by the way, and everybody else in the room. Welcome to the show. When you look along here, it's difficult to know exactly where the trend line is, and if I put it there, then it kind of makes my case for me. But it could really be anywhere. But when the horizontal level is kind of brought into play, it looks a little bit clearer to me. And let's see if I can change this as well. I flip between colors and it changes my my levels. Here's the horizontal level here. Actually, I might make that just a bit thicker. And we're right underneath that. So and there is a daily pivot here as well. When you kind of look under here, there's the daily pivot. So there's some resistance here. The question really is, have I got absolutely the right area, which is really what I'm relying on here, and it's coming off this 15 minutes a horizontal level along here as well. You can see that it's attempted to get through a couple of times. I don't love the yen against the Sing, but I'm with you. I think the yen is potentially the story of the week, and I don't think it will matter hugely what you sell against the yen. But as you say, the situation with the Bank of Japan is pivotal to this. Do investors and traders sell into? I should say buy into the prospects of a stronger yen before the interest rate decision. And I would have thought it's more logical to do so than not, purely because of the value of the yen. When you kind of look at where we are, this is the Sing yen. So the Sing yen has had a huge rally to the upside. You can see last week's bar does suggest some downside. It might only come to the monthly pivot, and to be quite honest, if it comes to the monthly pivot before Tuesday, then I'll probably take profit. If it doesn't, then I'll leave it run, because there is a lot of room with a lot of these yen pairs. As you say, the dollar yen may be a little bit different, but that's also a pretty strong level of resistance. And we do have a hint of a bar it looks like we did have a push down last week, and looks like some of that yen strength is coming in. Aussie yen, very, very similar. The bar is wider, and I quite like the Aussie yen for some downside, but the pattern is trapped, so not so keen on that. I was in the CAD yen last week as well, but I took profit on that because of my style. But actually, I would have been quite happy to stay in this one as well. They all look like they're getting quite heavy up here. The question is really about timing as much as anything else. Trying to trade it before the news, I think, is absolutely fine. But I think we need to accept that they're low probability trades. There's 50-50 probably at best, because at this stage, of course, the Bank of Japan have still got interest rates at a very low range. So if investors kind of see that there's maybe just a little bit more to squeeze out of it before tomorrow, then there's no reason really to start buying the yen. But there might just be a little bit of shifting before that particular decision, and it's not that far away, is it? I mean, when I say it's tomorrow, it's actually pretty early in the morning my time.
Do
So
they
it's
ever
not.
disclose the time on that? Is there a time associated with it?
Yeah, so the
There
time
is.
is
Okay.
2:30 a.m. my time, so not even 24 hours away. It's more like 18 hours away that we've got the potential for that rate decision. So I think some buying could well come in with the yen relatively soon. I like the euro yen as well. I like the Swiss yen. And look, another really good looking bar there on the weekly. So it does appear that we could start coming down. The monthly pivot is right in the way here. I'm just going to thicken this up as well so we can see it maybe a little bit easier.
Yeah, it kept me out of the market on a few this morning. The monthly
Yeah,
pivot, I'm afraid.
it's right in the way. The trend looks like it is breaking down just above the monthly pivot, and there was an opportunity early this morning if you were sort of brave enough to take it around about that daily on the daily pivot. It looks like a really, really strong level here. But that was before I woke up, so I couldn't take that particular trade. But it does look to me like if it comes back into the daily pivot area, doesn't matter if it's today or tomorrow, but if it's today and it comes back into this area, that looks to me like a selling opportunity, and I'll be quite happy to take that on board with the stops at the highs. So the yen is the one I'm stalking as well. We do need the
We're brave.
BOJ to.
Gee, we're brave, aren't we? We're really brave.
Well, yeah, brave or stupid, I don't know, mate. But
Yeah.
it's come so far, and we both know that ultimately things
Yeah.
don't. Gravity in the end will always win. So we know it's going to come down at some point. This is just crazy moves, really. When you sort of look at this on a monthly, it really does illustrate the the extremity really of what we've had. And we're not saying all of a sudden this is going to turn around. We're just sort of saying that an easing back to an area would be, I think, sensible and I think well worth taking on. So, and it'll probably happen relatively quickly, but it does depend on that BOJ. And are they likely to raise interest rates? Well, they've had inflation, which has suggested that that they are, things are changing in the Japanese economy. If you look at the fundamentals, then the situation on inflation is. Let me just bring it up actually. So the situation on inflation. There we go. The situation on inflation in Japan is 3%. Last time it 3.2%, but they're now at 3%. So they're over their 2% target, and the only one that isn't is the Swiss bank. And as I say, even though it's eased to the downside, it's not coming down quite as aggressively. But you consider that in the States it's 3.7%, and they're still talking about raising interest rates. The Japanese economy isn't that far away from that. So 3%, they may not raise interest rates, but they may just kind of add a little bit of narrative which suggests some monetary jiggery pokery, which encourages investors to come in. Because I think what everybody's looking for is, as we've said for quite a few months, not necessarily for the Bank of Japan to come towards the other central banks, but the other central banks to come towards the Bank of Japan. So, a lot of the statements have come out to be a lot more dovish recently, and I take your point on the RBA, but they've been a little bit tepid as well. They haven't been particularly the speak hasn't been particularly aggressive, as it hasn't been from the UK as well. Surprisingly, but most surprisingly, with their with their inflation data so high. So I think there's a possibility, mate, and I think it's worth taking on. I think it's a little bit like the CAD Swiss that we saw a few weeks ago. That as traders, we want to kind of look out for this kind of scenario.
I'd like to see a lovely setup. That would help.
Yeah.
But, it's kind of building it. Like I said last week, Kiwi yen was really my favorite, and it didn't set up properly, and that's why I moved my stops to entry too early, because I thought I was maybe wrong. But this week, I think if we can get a little bit out of the Kiwi before the news today, then that may well just set up for me.
And
that's what I'm looking forward to.
I'm with you.
Speaking about with us,
yes,
George is with us.
George is with us. Amazing.
Hello, buddy.
It's amazing. I probably should be still nursing a hangover after our victory, right?
Oh yeah, what a victory that was!
Yeah,
what a victory that was! Amazing.
Can you imagine that? I mean, who has ever had 3 World Cup finals wins by 1 point? I mean,
that's incredible.
That's but we are traders, and that was on Saturday, so I recovered yesterday. So we're looking at the I say I recovered, not every drink I just it was a late game, that's all. So I slept.
It was way too early in the morning for me. But did you message Mr. Bottrell giving your commiserations? Or bragging?
I gave a thought, but I thought probably not to push it a bit to the boss, especially after the captain went out. That was I almost thought of sending it then, but I thought, let's.
No.
But I'm talking to him on what is it? When is the night my time? So face to face is probably better.
I spoke to him last night. He's not too grumpy. He's okay.
Yeah.
I mean, they probably did well to get to the final, didn't they?
Eh?
They probably did well just against the final. I mean, I know they had a brutal game against Ireland, and I think everybody thought that Ireland were going to win that game. So they probably did well to get to the final. I'm not saying they overreached themselves, because with a 1 point differential, it's too tight to call, and they missed a penalty as well, didn't they? So they were unlucky.
And they scored the only try, and they had a guy sent off. Yeah, there's a little bit of a hard luck story there, right?
Yeah.
But good on the South Africans. George is celebrating still.
Yeah, surprise.
Excellent.
What do you got for us, buddy, apart from a Rugby World Cup victory?
Well, a bit of waiting, actually. I've got 4 markets on. I have a range of 8 markets that I look at. I've just narrowed down to these 4 in the last couple of days of the month. So I try and avoid distractions, because you really can't juggle more than 4 or 5 minute markets at any time. But the waiting I'm talking about, I mean, gap ups this morning. It's just look, if you look at the close of Friday, big gap up on the DAX, UK 100, something huge gap up. S&P 500, we got that as well. And I've got a currency in, so that's and I like to look at currency and maybe pick up 1 or 2 going in. But the key thing when I say waiting, that gap up, I don't know, the guys on the Asian side, they've been trading. You might have found some long opportunities, but when you go into the open this morning, this is DAX. So I just made a note for myself. The pre-market small pullback, that should be bull trend. So market is just rushing up. And this yellow rectangle is the first candle of the session. There's nothing for me to do here. So the only thing I'm going to do is wait to see if we do get to the high of Friday, and see I'll just do it on one market because they're all the same, basically, in terms of that gap up, and see if at that high, the bulls are going to be strong enough to break out above that and try and create a huge bull candle, for the day between today and tomorrow, and maybe try and reverse how the month ends. So I can't do anything until I get to that high, which is not far. I mean, we're not talking. I mean, it can happen at any time. So that high is not far. Same thing on the FTSE. I mean, look how it's just accelerated up. Even as we opened, first candle, bears tried to break out, bulls just came in, put a big bull candle. Now, immediately I would have thought, well, if the bulls are strong, we need to have follow through right away. There's a bit of stalling. We got the high of Friday here. So again, that's not far. Now, how we're going to get there is going to determine my thinking. On the daily, although there's this bull acceleration gap ups, we are in a bear trend. So this could just be an attempt to pull back, an attempt to test levels of resistance. So if we get up here and we're getting bear candles coming in, bull breakout, strong bear candles, bull breakout, strong bear candles, and I might be looking for a possible reversal at the test of that Friday high and see if we can accelerate down. So I'm really going to be informed by what's going to be coming in the next few candles. S&P 500 is interesting. I have two ways I trade it, or rather two themes, if you like. If I see setups during the European session, I do take them, but I'm always cautious as we get into the US market, US session, because when that opens, that becomes a completely different day, and sometimes doesn't even respect any levels that took place in the European market. So, always bear that in mind. But again, in this session, if we get to that high, then I'm definitely going to be looking to see if we get, failed breakout, double top, reversal, etc. I mean, the US probably shows clearly that we're still in a bear trend. So, whatever is happening with the bulls now, it's just be an attempt to test that and, to see if there's enough strength by the bears to have a lower close into the end of the month. I think the probabilities favor, it could be 1 point, as in rugby. The probabilities favor the bears, across all the markets. Then, I put up the pound. I want to see if the bears probably have strength to get to test that level. There's a move that's already taken place before the open. So if you're watching it before the open, this is the open of European markets. But earlier on, there was an opportunity, if you're looking in earlier, to probably have gone short, maybe with this candle. You probably would have missed that. That would have been pretty fast. But I'm going to wait to see if the bears are going to test this level down here, which would suggest a bit of weakening of the currency. Then that red line is the low of Friday. I want to see how that is tested. At any time whether we get an opportunity there, or we might just get trading range behavior, and then we can find ways to try and jump in. So that's my thinking on just these four markets that I'm going to be focusing on the next over the next couple of days, gents.
It's interesting, George, actually, because we got stocks in there, probably most bullish part of the year historically, and yet we really probably haven't yet satisfied enough downside to suggest that we've based, that we bottomed out, in my opinion. And particularly when I look at the S&P, the S&P looks on the weekly time frames to have just that little bit further to go. It doesn't look like it's not. Actually, the S&P doesn't look too bad. Maybe it's the maybe the monthly, but the Nasdaq was the one that looks like it got overblown. But the S&P actually looks like it's maybe kind of getting close to those levels. But it's still, I don't know. I mean, that, last week's bar still looks like that there could be some further downside, or certainly we need to see something stronger, some stronger bottoming out pattern down here to suggest that we can all of a sudden start flipping. But
Yeah.
but as I say, stocks are in their strongest part of the year. They tend to be in a strong part of the year, and I wonder whether we might get a rally purely off the back of that, even though longer term, i.e., going into next year, we still have another flush to the downside. The huge difficulties with what's going on in the Middle East and Russia. When Russia tends to, well, they did last year, managed to kind of like squeeze the market with winter kind of setting in. Oil markets, particularly sort of as a barometer, all over the place. Gold continues to kind of push higher. I don't know how you feel about the gap. When you said that, all of them have gapped up, I looked at the S&P. I didn't look at the S&P. I looked at the Nasdaq and the FTSE this morning. I thought that gap's a problem. I don't like unfilled gaps before I take a trade in the direction I want to go in, and I wonder whether we might need to see that gap filled, create some sort of bottoming pattern, and then actually, I would be okay with looking for some upside for a period.
Yeah, I mean that gap only becomes a gap if today closes and it's not closed. So it's just, so far for me, it's just the gap up for the morning.
Yeah.
But if we continue to go, okay, let's go to the daily. If we continue to go up and we close up here, then we can, assume that there's some bullish strength. But it's still early in the day. We can still come back and maybe create a double bottom or break through that. So it's just indication of, whatever it is that's triggered in the market. And it depends it just depends what's going to happen in the rest of the day, because it can close, can come back, close, and just end up as a dodgy day to create more confusion. But if the bulls are strong after this, then, and we take that out, then we can start to think, well, they might have followed through. But a strong bull candle here does not mean a bull rally, because we are in a bear trend. These will just pullbacks until we get, above levels of resistance, clear out all the highs, etc. Sorry, Jeff, I think you were saying something when I jumped in. Apologies.
No problem at all, mate. Begs a question for me, exactly those points. And the question is this. We are, without question, in a risk-off scenario, driven primarily, one would suspect, by the atrocities going on in the Middle East. To my mind, and I've said this all along, and so far I've been proven 100% wrong. And I've said that, and still maintain that nothing really has changed in the Middle East except the probably intensity of what's going on. The difference, and the real difference, appears to be the reaction from people around the world, in that we've got protests everywhere around the world, which is something that's very, very interesting to me. We've had protests of wars since the day began, or since the world began, rather. And to my mind, I think the market, in an incredibly risk-off sentiment, has overreacted. And I, as I said at the start, I find that very difficult to say, given what is actually occurring over there. But it's occurred through time immemorial. And the only question I have, or the two questions that I have, is one, what turns that sentiment around to enable the market to rally? Or two, is what I'm saying actually on point, and the market has overreacted, and is that what turns the market around? Any thoughts?
I'll tell you the perverse thing, actually, mate, is that if you look at Russia, the Russian Ukraine situation as an example, and this is historical examples, war is actually very bullish for stocks, but there does tend to be a sort of a knee-jerk reaction to start with, where everybody kind of like goes in and panics, but then it does turn around and it does just kind of like flip itself in the opposite direction. So I think ultimately, it's when things start calming down a little bit, then we do, when sort of like the market does kind of price in what they believe to be the status quo in some respects, then things do turn around. Swede's got some interesting things as well. As he said, today's a full moon, so she's looking for the gap to be filled tonight, and then looking for a long setup. And I don't know too much about the kind of moon cycles, but I know that there is, there's some decent study on things like the moon cycles that appear to be pretty, decent cases to kind of for reasons to take a trade. And also, you might know this one, George. Also read some theory on the 3, the 5, the 7 daily bars in the same direction before a retracement. I haven't come across that, but I've heard people talk about a certain amount of time before a retracement, but being a huge studier of technical analysis, have you come across anything like that, George? 3, the 5, the 7?
No, I haven't.
Okay.
Unfortunately, so I can't comment.
Yeah, I mean, there's definitely theory about a certain sort of extended move before a turnaround. But I do think you make a good point, mate. I think there is probably some overreaction that's gone into the market, as happens, and you can see it on gold. There's another one with a huge gap, but you can see it on gold.
I want to show you the gold chart in a minute when you've finished this point.
Yeah, that'd be great. But ultimately things do sort of settle down and turn around. And actually, as I say, war and conflict tends to be quite bullish for stocks in the long run. So I wouldn't be surprised if we do see a bit of a turnaround.
Indeed. I'll show you this point. And again, I've been doing a little bit of research into this. Very unlike me, but there you go. I want to point out February 2022, and that would be there, right there. And that's when Russia invaded Ukraine. The market, this is gold, right?
Yeah.
The market shot straight to its high.
Yeah.
Turned on a dime, absolutely turned on its high and crashed. This reaction we're seeing at the moment, when did Israel go in? Was it this month or earlier last month? Can't quite remember.
Yeah, it was this month, yeah.
Right. Well, look at the reaction so far this month.
Yeah.
There's the reaction to Russia into Ukraine. Here's the reaction of Israel in Palestine, which has only happened in the last few days, really, the actual invasion. Yeah. That to me is interesting.
Yeah.
I would have thought by multitudes that Russia invading Ukraine would have been far more reactive, or the market would have reacted far more to that than it would to Israel invading Palestine. Yet, what am I seeing? So I don't know where we go from here, frankly. But to me, this is an overreaction, and that I think is really interesting.
Yeah, I agree.
Russia into Ukraine, Israel into Palestine.
Yeah, do you know what I think is the most interesting aspect is the counter reaction. After it kind of has after that blowout, then we do see sort of some significant downside, and I think you make a really good point, because gold, by all intents and purposes, was that was okay. It wasn't crashing, but it was going down. It was going low. It was very bearish, gold. Right, really just before we had that situation, and I know people were looking for a level to kind of go long potentially, but it was still a little way off by, I think, most people's analysis. But then all of a sudden it turns around. We still got a gap to fill, which I don't particularly like. And who knows what happens from here? You look at that on the daily. Look down there. I mean, it's quite big. It's almost a day's worth of price action. No, even further down, mate, right at the bottom.
Yeah, I'm just looking at this from Slingshot Traders. Wow.
Oh yeah.
You could have picked that up there, guys, on that bar. Sorry. Back to your point.
Yeah, that gap down there.
Oh, here, yeah.
Yeah. And that I just don't like them. That draws me to look for downside. And until that's filled, I can't look for the upside. But the truth is, if that does get filled, it's such a long way away. The chances are it keeps going. It's not like one of those what we were talking about earlier. You mentioned, George, if the gap on the indexes get filled today, it's still quite bullish. If this gap gets filled, it could be anybody's guess in a lot of ways, but it actually would look pretty bearish because it's going to break through a lot of levels to get there.
I'll put it this way. If I see a signal to sell on gold at the moment, I will do that.
Oh, I've tried, and I've got chopped up. I tried it. Like actually, I did. I was in Friday, and I had a decent signal to sell on Friday, but look at the bar. Look at what happened in the end. It just kind of like
This one.
took off. No, the bar on Friday,
Oh,
the Friday
Friday.
bar.
Oh,
Yeah,
yeah. Okay.
You know, you look at Thursday's bar, and it's a little bit questionable, but it looks like it's, you know, and actually that there was you had that first high test bar in the run, then Thursday's bar looked like okay, fine. You know, we might have something going on here. So I did short gold, but then Friday just took off, and that's the issue right now is that there's still quite a lot of uncertainty about the amount of pressure that's going to be put on the area. You know, there seems to be a lot of other countries getting drawn in. So, and you say about Russia, Ukraine. I mean, right now we got Iran getting potentially drawn in. That's an incredibly inflammatory situation.
Oh, yeah.
Syria, you know, that whole area is getting drawn into this situation, and this is problematic because every single time that there's a setup on gold, fine, you know, you've kind of got to take it, but all it takes is for some kind of news event to happen, which is happening really regularly, and you get taken out and actually aggressively taken out. You know, I'm with you, and I will try and sort of trade this one short again when there's an opportunity, but tough to get hold of, really tough to get hold of.
In this environment, yeah, in particular,
Yeah.
that's for sure.
Yeah.
I mean, it was telling us previously the gold gap was filled after months, and you know that's the nature of the beast, isn't it? That's why it makes it so difficult, because we know that the gap will close. What we don't know is if it's going to be this minute, this month, this week, this year. That's the problem. And that's why you hate them. That's why I hate them as well, because they're there. They're there in the background, right? They're just another thing, if you like. Okay, we're down to question time, and thank you guys on YouTube for those questions. Dinesh wants to know, and Ash, this was one of yours, so I'll defer this one to you. CAD yen, would like some analysis on CAD yen, please.
Sure. Yeah, I mean, I think the CAD yen has probably got some further downside, as I do with anything against the yen. Interesting that really sort of the CAD, to my mind, is getting a little bit affected by what's going on with the situation in the Middle East as well. I mean, you know, it's heavily oil kind of dependent on its economy, on its economic kind of environment, but the seasonal pattern on the CAD is really, really weak, kind of coming in. That's kind of like the first thing to note, is that it is the weakest of the currencies. You know, Aussie is a close second, but is the weakest of the currencies kind of going into the end of the year. Well, in fact, going into the next month. So November into December, it's the weakest of the currencies. So that's the first thing to note. That it suggests that the CAD probably does have some downside right across the board, never mind against the yen. The obvious kind of driver right now is to do the Bank of Japan. And if the Bank of Japan do decide to say something, I don't know if they're going to raise interest rates, and we shouldn't probably focus on that, but some kind of yield curve control, or I don't know what other tools that they might draw on, but something. If they draw on something, then the yen, you know, has got a reason to strengthen, where actually the CAD's probably got a greater reason to weaken at this stage. You know, if you kind of think about where the Bank of Canada has come from, you know, they're at 5% interest rates. They are starting to see maybe just a little bit of weakness in some of their dynamics. Inflation data, 3.8%. You compare that to Japan at 3%. So that's not that far away. You know, that's kind of, they've been going in opposite directions as well when you kind of look at that particular dynamic. GDP growth last time out was terrible from Canada as well. And it's actually, you know, we're seeing some growth in Japan. So there is sort of like, there are some dynamics which suggest that the Japanese economy is probably also outstripping the Canadian economy. So I like the background scenario even before I kind of open the chart. But when you look at any yen chart, it has been heavily sold off. And if you look at where we are on the CAD yen, this is the monthly chart. Now, I haven't got anything that kind of goes back any further to suggest this level, but this level currently is holding out, and we probably should put it right to the highs. But this level is currently holding out as a point of resistance. This is definitely not a buy zone. If this is either, it's a sell zone. So last week's bar showed some pretty excessive downside, and it broke through a relatively scruffy looking trend line, but it did break through here. And any kind of retracement between here and 108.92 to me would suggest further downside. So that's what I'd be looking for. I'd be looking for anything that kind of comes into. I mean, it might even be down there. You could draw it. In fact, I'd probably try and get as many touches as possible, which looks like it might even be there. You know, we might even be already on top of it. But ultimately, anywhere along here, you know, is a sell zone, and it just depends on what time frame you then choose to get in at, in my opinion, and where but you know, subsequently where you then put your stops. So this whole area here to me is a sell zone. So my analysis, mate, ultimately is sell it off.
Yeah, I think remarkably from me, the only two caveats that I would add to that, technically agree 100%, but the only two issues that may affect this going down are, one, the BOJ, of course, that you've mentioned, but two, if Iran does get involved in this fracas, then I would suggest the oil price is going to rally substantially through the $90 mark up to $100 mark pretty quickly. That could put a little bit of a fire underneath the cat as well.
Yeah, and I guess this is going to be the kind of the tricky thing, isn't it? Because we know that the yen is also a risk-off currency, so they could be battling each other in that front.
That's right.
You might have an oil story, but then you got this risk-off scenario kind of going on. But you look at this as well. I mean, you know, you're picking it up right now potentially, and it's only potentially because we don't really know whether this pattern will ultimately play out. But this might be what's going on. This may well be a left shoulder. This may well be a head. Now, if that's the case, that makes this a neckline. So you pick it up anywhere along here, you're picking it up somewhere around that right shoulder. And then if it goes through, then you're really kind of looking for some downside. But it's possible that this kind of comes up and creates another peak. Now, you'd have to kind of measure that in, which is about 1, 2, 3, 4, 5, 6, 7, 8, 9. It's about 10 bars, which is early. You know, this would suggest it's early, and it would suggest that maybe it comes down later. So maybe the head and shoulders pattern isn't what we should look for, because as I say, the seasonal bias is for Canadian dollar weakness. So we're in the right time frame to be selling the Canadian dollar, not necessarily against the yen, to be fair, but the yen does kind of come up as a strong currency in this environment. For multiples of reasons. So yeah, I mean, I do take your point about oil, and it's going to be difficult to know which side of the fence that the market ultimately falls on. But so far, if you think about when we had the situation with the situation in the Middle East, this has weakened. You know, this was even before it happened, and this has continued to weaken. So there's no evidence right now to suggest that the market is particularly jittery. In saying that, it's the same with oil. You know, it's the same with oil across the board. And actually, with recession picking up and gathering pace, that also weakens the oil dynamic. And the only thing that can keep the oil dynamic high at this stage seems to be the conflict, which makes it really volatile. Because the global growth seems to be continuing to contract, which also doesn't play into the Canadian dollar's hands either.
Yep. So the rhetoric is a little bit iffy, but as you said, since the fracas began, this has only gone down, and that's a classic risk-on currency versus a risk-off currency. As I
said.
Said.
Exactly.
Yeah. Any more questions, guys, for George, myself, Ash? Anything you like? We'll give you a few minutes to do that. If there's none, then guess what? We're going to go. Tick, tick, tick. You're going to hear the pin drop, couldn't you?
We need a clock.
The proverbial pin drop.
Yeah.
Yeah, we need a countdown, don't we? I've got a countdown, but it's 2 minutes. I don't think I'll put that back up.
No.
Swee's all good. Swee, hopefully catch you later. Yes, indeed. Fantastic. Those of you in the Slingshot Ultimate, there'll be Q&A coming up in about 40 minutes from now, I think it is, as a matter of fact. What else have we got going on? No, we're all happy. Then guess what? We're out of here. George, when do we see you next, mate? We can catch you on Wednesday, right?
Good point. The show is now shifted to Friday.
I knew that.
So it's no longer Wednesday, the live trade and profits. Friday, same time, 12 or 6:30 p.m. Sing. That's when it's going to be. So we'll catch you on Friday. Alternatively, it will be Monday next with you guys.
Friday. That's awesome. Just well into beer o'clock on Friday, mate. What's going on?
It's only 12:30 p.m. my time. You know, midday.
Yeah, that's what I said. It's well into beer o'clock. All right, we better get out of here before I get into trouble. Thanks for being our trading buddies, everyone. Thanks, George, and thanks, Ash. As always, wonderful to have your company for the last 45 minutes or so. And we'll do it again next Monday. Have a wonderful week, everyone, and we'll see you later. Bye-bye for now.